Honorable Member for Kitui Central, Makali Mulu.
Yeah, thank you so much, Honorable Speaker. Honorable Speaker, I also want to add my voice into this important discussion. Honorable Speaker, I've been seated here since yesterday, listening to contribution by honorable members. And Honorable Speaker, I think it's important we put a few things to perspective so that members can debate from an informed position. Honorable Speaker, this finance bill, this one, the green one, is a product of the executive. What did the executive do? They went through their own public participation, and this bill went through the cabinet. And it is after the cabinet's approval that now it found itself into this house. So what does it mean, Honorable Speaker? It means the intentions in this bill are what the executive intends to do to the Kenyans in terms of taxation, Honorable Speaker. Now, after coming to the House, Honorable Speaker, it was tabled and handed over to our Finance and Planning Committee. What did the committee do? They conducted their own public participation, and as a result of that public participation, we have a committee report. This committee report has not been adopted by this House. It is a proposal which will now be discussed when we go to the third reading of the report. So, honorable members who are telling members that the committee has changed anything here, we are here to do that as a House. So as we debate, we need to look at the intentions of the executive and the intentions of the representatives of the people who already we have a committee report which has come to us. So I want members to be free to debate the executive intentions and the intentions of the committee. Now, honorable members, this finance bill is going to amend a number of other acts of parliament, starting with the Income Act, VAT Act, Tax Procedures Act, and what it is doing, it is amending those other acts which are existing. So on the basis of that, for you to appreciate what is in this bill, you need to look at the original bills. And unless you compare the two, you are not likely to get it right. Honorable Speaker, it's important to remind the honorable members that this country has a document called Medium-Term Revenue Strategy, which provides a roadmap in terms of what we do with our revenue collection. And it's important you look at the macro environment under which we are operating. And that is the document which provides that environment. In that document, it is proposing that as we move to the future, it is important we move VAT from 16 to 14. And once you look at that document that way, then you realize that there are areas where we could have done better. And I want now to go to the document and put some comments, Honorable Speaker. Where this economy is today, Honorable Speaker, any government which cares about the economy and the growth of the economy is a government which should be thinking about putting more money into the pockets of people or allowing businesses to have more cash flow, so that on the basis of that, Honorable Speaker, then you can grow the economy. Otherwise, in a situation where you are taking more money from the pockets of the Kenyans, or you are restricting businesses in terms of cash flow, then you are not doing this country, you are doing the country a disservice. Honorable Speaker, I want to comment on a number of clauses. And for me, the punchline, Honorable Speaker, is where we are talking about putting people into the pocket, money into the people's pocket. And any proposal, Honorable Speaker, which is not putting money into the people's pocket, Honorable Speaker, then is a proposal which should actually be rejected. The first one, Honorable Speaker, when you look at the bill, Honorable Speaker, initially, people would want to claim tax refunds on bad debt after 2 years, Honorable Speaker. What has this bill proposed? It is proposing that you push that, Honorable Speaker, to now 3 years. The only reasoning behind reducing the period from 3 years to 2 years, Honorable Speaker, was to push more cash to the businesses in terms of cash flow, so that they're able to do more activities. Now, when you extend that to 3 years, Honorable Speaker, automatically, Honorable Speaker, it means then business will not have enough money, and then they will have cash flow challenges. And as a result of that, Honorable Speaker, then you will be restricting the economy you want actually to grow. The second point, Honorable Speaker, which is critical. If you look at the clause talking about moving items from zero rating to tax exempt, Honorable Speaker, a number of items have been pushed under that clause, Honorable Speaker, and that is clause 31. Honorable Speaker, clause 31 of this bill lists a number of items, and I want honorable members to realize this. Anytime you move an item from zero rating to VAT exempt, when it is zero rating, it means you can claim VAT on the inputs to that item. When it is tax exempt, it means you can't claim VAT on inputs. So immediately you move it from zero rating to tax exempt, automatically then you make the item more expensive because the earlier VAT on inputs will be pushed to the consumer, Honorable Speaker. And that's why you see the issue of Mitumba becomes very controversial. I know my colleague has said Mitumba is not being taxed. But what has happened, Honorable Speaker, we have removed Mitumba from tax exempt, but if you look at the original bill, there is a proposal to tax the income from Mitumba by 5%. Now, once you tax by 5% automatically, then the price goes up again. And these are the issues we are saying. So who is targeted when it comes to Mitumba, Honorable Speaker? The person targeted is the Kenyan who is at the lowest in terms of income bracket, Honorable Speaker. And what that does is then you make Mitumba expensive. And that was the intention of the government. So we are saying it is good that our committee has pushed out that element of profit. But yet, we are not yet there, Honorable Speaker, because, Honorable Speaker, you know, we might make our amendments here, and when they go to the side of executive, then the executive says they don't agree with us, which means you have to raise 2/3. If we don't raise 2/3, Honorable Speaker, then the bill remains as it is. And that's why we are saying, members, it is important that we realize we have to be careful, Honorable Speaker, that we are likely to see the price of Mitumba going up, depending on what the executive will do with our recommendations to change the bill. The other item, Honorable Speaker, is the item of rent, Honorable Speaker. We do agree that we have been paying rent at a uniform rate of 7.5% tax. Now, what this bill proposes is, if you are an non-resident, you will be able to pay 30% of the income which comes from that rent. The question is, I'm non-resident, but my house is in Kenya, or my mall is in Kenya. So the people using this mall or my house are Kenyans. If I've been making $1 million shillings in a month, and the cost goes by 30%, I have no choice as a business person, but I'll push some of that cost to the tenant. And that's what we are saying again, by pushing more cost to the tenant, you'll still be getting more money from the tenants. And that means you'll be making things worse instead of improving them. So, honorable members, this item, while it looks very beautiful, honorable members, irrespective of who owns the house or the mall, it is a Kenyan who lives there, and immediately the cost of that taxation goes up, that will be transferred to a Kenyan. That's what I was saying. The third point, Honorable Speaker, is the issue of VAT on digital services. That is, anytime you transact through your card or M-Pesa, this is supposed to be increasing, Honorable Speaker. Automatically, another good point of money being taken from people's pocket and not helping the economy in terms of growth, Honorable Speaker. Honorable Speaker, there is a very controversial matter here, Honorable Speaker, and I want members to listen to me. This matter of the Commissioner of KRA determining your tax assessment through third parties or through other information, Honorable Speaker, is a matter as a House we need to really take time and think about it. Because what it means is that they can use that data, give you a tax assessment, which might not be real, and by the time you start appealing, then a lot will have happened. And in a country where, Honorable Speaker, these things, we know what happens in this country, this is a matter we need to take that and think through. Honorable Speaker, as I conclude, the issue, because I can see my time I'm getting short of time, Honorable Speaker. There is an issue of, Honorable Speaker, the issue of tax brackets. When I look at the committee report, a number of our stakeholders recommended that we review the tax brackets, and I think the whole thinking was the 30% which was promised. Honorable members, if you want to put more money to the people's pocket, and if the committee is really helping us as members of parliament, it is important we factor in new tax bracket bands so that that 30,000, Kenyans who are earning less than 30,000 can pay lesser tax as it was promised by the executive. I submit, Honorable Speaker. Thank you so much.
Very well.